Good afternoon, folks. Joe Baker with Trade Pilot. Well, we were looking since July for the 1072 area, and that would have been a ABC structure down as well as a head and shoulders top that I had put up. Both times I came up with one was 1072, one was 1073. So obviously that area was tapped, and I had mentioned in the room and in some other areas, as long as we don't get any extensions on this, we'll be in great shape. Now that extension would be the 1 to 382 extension, which brings us down to about 981. Okay, 981 would be the end of this. This backing and filling is actually healthy. We came down on about 4,400,000 yesterday. We took out the low. That's what kind of bothers me a little bit. If we had held the low, that would have been great. We did come down today with about 4,200,000 on the S&P futures. So I haven't checked any of the other indexes as of yet. However, I like to see retests on lighter volume, and I like to see the lows hold. Always remember, if this market was just to race right up and just forget about coming back down and retesting, I'd be a little more concerned. I mean, I'm very concerned right now. Don't get me wrong. I'm just saying I would be more concerned over or more suspicious of the rally. I like to see backing and filling, backing and filling, backing and filling. That's what is a good sign of a strong market. But we gotta stop making new lows. Okay, I talk about that in the room all the time. If we stop making new lows and we go sideways, that's fine. We just got to start making a few continually higher highs throughout the day to get out of this area. Being that, hopefully we won't go to the 1.5 target, which would be 50% of the move, which would even bring us down lower. We have no idea where this market's going to stop. However, I can tell you, at the rate we're going now, we got about 15 to 18 days left, and we'll have no S&P points to count. Okay, so at some point it has to stop within the next couple of weeks. Okay, that we know, because we won't have a market left. That being said, we should get a little bit of consolidation, which is why I wanted to mention this tonight. I am sending out all three markets now. I'm sending out S&P, NASDAQ, and Dow. All three did hit their targets today easily, as well as some extensions. So, if you want, just go over to the blog, hit over by my bio, just sign up. They'll show up in your email. They already went out earlier, and you'll get them a little bit earlier if you do trade the overnight session, or you can just look at them, print them, and get prepared for the next day. What I did want to show you is this is our DMI ratio. Okay, this is what we call our DMI. Now, a lot of you know what a DMI is, and this is the directional movement indicator, and it's a kind of squiggly lined looking thing. It's kind of hard to track. And what we've done is we made it very, very simple to give us overall trend in market. If it's green, it's up. If it's red, it's down. Now, obviously, market with this volatility, I also want to add that we also throw in a few things. A 34 and a 200. A lot of you have heard me say it before. A lot of you haven't. Okay, we use a 34 EMA with a 200 EMA. This, what you're looking at right now, is on just a 5-minute chart, and you can see that our EMAs turn color and let us know that price is above. This turns green. Now remember, if the 34 is beneath the 200, we're in a downtrend. So anything is a counter trend trade looking for lower levels, unless price gets above the 200 and then the 34 gets above 200. Then we are now in an uptrend, and I'm looking to buy pullbacks, not sell. Okay, so you have to understand, I'm not going to be selling. I'm going to be buying pullbacks. Here I'm selling rallies until the 34 gets above. Just wanted to go over that with you as far as little trade setups, little tidbits. You have to excuse me, I've been a little sick. Throat's kind of bothering me. That's why I've been a little slow at getting some of these videos out. But at any rate, I am feeling better, because I know you're all concerned. I'm not going to be going over the targets and the levels, because it's three markets now, and it's just going to take that much more time. What I'd like you to do is just go over, again, just go to the bio section to the left-hand side of my YouTube page. There's a link to my blog. Just click on the link, go up to the upper right-hand corner, put your email address in. You'll automatically get the levels by email. You'll get all three. You can print them, put them next to your computer. If you trade the NASDAQ, YM, or S&P. You can also use them in relation to one another. The S&P hits a level and it's a strong level. Basically, the Dow will bounce and the NASDAQ will too. I've found it was very useful today in the room having all the levels. The Dow hit a level and the S&P popped. Ultimately, it came back down anyway, but the pop, as you know this with the volatility, was about a 6-point pop. So that being said, I just want to let you know that all three levels are going out now. If you'd like to receive them, go right ahead. If you'd like to get a pass for our room, that's fine as well. Just email me, okay? Leave me a message at the blog. Leave me a message on YouTube. I'll get you a pass. Just go over to our website, not our blog, but our website, and there's a link to Learn and Earn, and just click on the link, and they'll ask you for the passcode that I give you, and you'll be able to pop right in and see us trade all day. Take care, folks. I hope you don't get this cold that's going around. It is a little bit of a nasty one, and just wanted to show you a few little trade setups and that we have in some of our proprietary indicators. Again, 34 under 200, down trend. 34 above 200, up trend. That's basics, and that's on a 5-minute chart. You can also use that on a 1 if you want to focus in on some real pinpointing executions as far as getting in or out of the market. Okay, guys, take care. I'm going to cut this short. Go drink some tea, and I wish you all very safe trading, and hopefully we'll find some sort of a bottom here and stop this carnage. Like I said, I've always stated throughout the last 3 or 4 months that I've been doing these videos, I've been concerned about the housing market, been concerned about all this. Go back and look at some of the videos from 2 months ago, 3 months ago. You'll hear me, all the cause of concern, been in cash, worried. Storms come in now. What do? Go from here, we deal with it. And us as traders, it's staying in the game, okay, at this point. Don't be a cowboy. I know a lot of you have probably gotten thrown around and tossed around like a rag doll. Just try to trade less frequently. I know it's hard, but you really got to get a control of your emotions in these markets. They will get the best of you. Okay, be bigger than your emotions. Be bigger than the problem. It's the only way you're going to be able to control it when these markets get hectic like this. I know it's tough to trade them, but just be willing to get up and walk away, come back again, pinpoint your targets, trade less frequently, and make more money. I promise you it will happen. Okay, guys, take care, and I'll talk to you tomorrow.